Good morning, everyone, and welcome to this Friday morning TriggerCharts pre-market rundown. I'm your host, Kevin Hoffman, co-founder of TriggerCharts. Just want to do a quick mic check. Everybody, let me know if you can hear me out there. I think I have the mute button off. Looks like we're good to go here. Before we get started, you guys know the drill. Important disclosures. Investing involves substantial risk. Past performance is not a guarantee of future results, and a loss of original capital may occur. Please consider this for educational use only, and as always, use your best judgment when investing. I don't know if you guys were watching me or not while I was kind of setting up my screen here, but kind of got caught off guard with lumber. It's continuing higher. I think last time we checked on April 30th, last time I was here with you guys, it was around 1376. It's jumped up to 1607.50. So if you guys happen to have any plywood sheets laying around, you might want to try and look to offload them on Craigslist. I've seen a few people post pictures on Facebook and Craigslist and whatnot saying, I have 18 sheets of plywood. I'm ready to buy a car or trade with a car. So, but yeah, so, many of these home builders, I think we've talked about this in the past. They have contracts already. It's just a matter of when they're going to renew and what they're going to have to pay for them. But other than that, certainly carpenters are struggling or will struggle or have to raise their prices. So inflation is still on the rise. Corn, as we looked at yesterday, Friday, also continuing on the rise. So all these commodities are still pushing pretty good numbers out there. So keep an eye on these because they're becoming rather volatile, and it's certainly going to trickle down into our food supply or products that we purchase after the raw materials have ran up so high. So let's just run down quick what we're going to talk about today, but I would like to get to your guys' symbols or stocks or indices that you want to take a look at today. I know that I didn't really get to those last week, as I had quite a bit of information, but make sure to think about those and put those into the chat box. Be happy to look at those with you guys today. Economic data we'll take a look at today. We did see the morning unemployment report come out at 8:30. We'll also talk about some of the intellectual property waiver that's being discussed with regards to the to vaccines. PPP has dried up. But there is another program called the Restaurant Revitalization that we'll discuss. SEC talking about changing some of their rules. They're worried about the gamification of trading. I'm not sure what you guys think about that, but they're very worried about the visually enticing colors that some of these platforms are putting out, and it's causing people to want to trade more. Somebody should talk to Vegas about that, though. I think the visually enticing colors are pretty bad out there. So. Next, we're going to talk about India's COVID situation and if it could cause potentially more global impact, and how they're combating it. Lastly, Biden's estate tax proposal. This one should be pretty interesting because he's talking about killing the step up in basis and taxing people on their gains after they pass away. So. Those are the kind of topics that we'll be looking at today. But again, let's leave some time for your symbols. Thanks, Mike, for putting that in the chat. We'll take a look at that. Morning's unemployment report, not good. 218,000. They were expecting 978,000 and an unemployment rate of 5.8%. Unemployment rate came in at 6.1%. Now, market doesn't seem to really care too much. Looks like we have the S&P futures still up about 35 basis points. They were up about that much before the report came out. So why isn't the market reacting? Are we back on a bad news is good news? I think so. There was a lot of talk about tapering and cutting back bond purchases, which would allow rates to rise. But at this point in time, all this bad news could potentially allow the Federal Reserve to continue to buy bonds, continue to stimulate, and continue to keep rates low for an extremely long period of time. The only concern is inflation, and by normal inflation measures, CPI, PPI, PCE, we're not seeing it quite yet. And a lot of that has to do with the fact that wage growth really hasn't pushed higher. And we saw that in today's average hourly earnings, where they only grew 0.3% on a year-over-year basis. So, again, we're in this kind of conundrum right now where people are still at home, not getting back to work. A lot of the lower wage jobs that are out there are not offering a high enough average hour, a high enough hourly wage to get people off their couch and stop collecting unemployment money and get back to work. So there's kind of going to be that conundrum of at what point in time will people actually get back to work, or will low wage places have to raise their wage that they're going to pay. Early on in the week, also bad data. ISM manufacturing came in at 60.7. They were looking for 65. ISM services, again, 62.7 versus 64.3. Also not great. The only positive news was the ADP private payrolls came in a large number of 742,000. However, they were looking for 800,000. So a little bit, disappointing news this week. But again, bad news could be good news. All right. This whole intellectual property waiver for vaccines is an interesting discussion that's been going on. The discussions are about a temporary waiver on this intellectual property provision, which would allow developing nations to maybe set up, manufacturing sites and create their own version of the Pfizer or Moderna or Astrazeneca vaccines. But there's a lot of problems with this, and I'm not sure why everybody's pushing so hard for this, because it would seem like a temporary waiver would have to be something like at least 1 to 4 years or something like that, because you're talking about gathering raw materials that are not quite readily available, setting up complex manufacturing processes. There's a lot of potential for counterfeit or people setting up sites giving out saline. I don't know, but it just seems like it would be more difficult to do an intellectual property waiver rather than having these foreign governments, try and help with some supply chain management, or setting up manufacturing facilities so that maybe Pfizer or Moderna could come in and create these additional vaccines for them. Really, though, the concern here with this is, will this set a precedent? Now, intellectual property protects these companies from people stealing, their formulas, etc., and creating the product on their own. And, if there's no protection for these companies, then what's the rush to innovate? And that's the problem that we're seeing here. And the other precedent is, now that if we're having a waiver on intellectual property for the vaccine, could this trickle down into something like insulin or other drugs that have been around for a while and are higher cost, which I know that AOC had been looking at attacking some of these drug companies that are charging extraordinary amounts for these products. So, will this set a precedent? I don't know, but let's take a look and see how these have affected some of these companies. But again, I'm just not sure if it's that big of a deal, considering how difficult, at least I think it would be, to create these drugs on the fly. But as you can see, Moderna, on a daily basis here, when they started talking about this, dropped from this around 183 or so down to 143. These are going to be volatile anyway, but this has a very good chart here with pretty wide bands. So if you're looking to potentially pick up some of this, this down to this 125 or even 140 level look to be some good support areas. Let's see if we can turn the radar on, see if there's any other levels of support and resistance here. So on the radar, we did break down below this high volume node here at 160, which probably caused this large sell-off here from 160 all the way down to 143. As you can see, if we look back on the second radar here on the daily, there is that support point here at 147, which is kind of where it's hanging out at right now. However, think it looks like we're going to open up here at 165. So, if you did happen to watch the radar yesterday on this particular position, you had good support here at this 147 level. So something to watch out here as this news progresses. Biontech also, this is the Pfizer vaccine. They're also talking about all the boosters that potentially people will need to get. So pretty big money stream that may come out of this as we go forward here. But again, saw this huge drop here. Has some support down here at 138, but again, going to open up a lot higher today at 178. And I think that's because people or investors or traders are realizing that it's going to be difficult for other countries or other suppliers to create these drugs just so quickly, just knowing what the actual formula and processes might be. NVAX, oh, that's the wrong one. NVAX. I think I already have these up here. I don't even know why I'm doing that. NVAX, good support here down at the 150 level. Again, it hit here yesterday. It's going to bounce up quite a bit today, 178.55. So may have missed out on this trade, but again, watch these extreme levels for these genetic and vaccination companies as they do move rather volatilely. So, if you can kind of play the outsides, that may be one of the better strategies to look at here. On the weekly, you can see you have really good support and resistance here on this 175 line. It broke down, stayed there, and then came right back up. So another good one. Astrazeneca, similar chart. However, it's on the downtrend. They've had some difficulties with this particular vaccine, so kind of not in the same boat per se as the Pfizer, Biontech, and Moderna vaccines. Moving on, PPP is out of money. I'm not sure if any of you guys run your own companies or sole proprietors or whatever, but there was a lot of money that was given out to these smaller businesses that did struggle due to the pandemic, and that money is finally run out after, I guess, about a year and a half or so. So far, they've given out about $780 billion to over 10.7 million borrowers. These funds realistically will be forgiven rather than just being a loan as long as they were used properly. I think the restriction is basically you have to use it for wages, some rent, utilities, other things like that, but should be forgiven. So that's why we're seeing so much money free flowing in the market right now, because businesses have extra money to spend potentially, and stimulus from unemployment benefits have come through. In 2021, they did also put out a new program for those whose revenues dropped by more than 25%, and they allocated about $292 billion for that. So those people who could get a second round, whose revenues drop below 25% on a year-over-year basis, or for I think it's from a quarter-over-quarter basis, then they could get that extra PPP money. And then in March, they also allowed those new rules for sole proprietors. Now, the problem is that a lot of these restaurants still haven't had a lot of people coming back to eat. Fast casual type stuff, whether it be McDonald's or Chipotle, have actually probably benefited from this, as people have actually gone out and done pickup or takeaway or delivery type orders. But some of the dine-in restaurants have still struggled if they haven't been able to quickly turn around their business from a dine-in to a takeaway type product. So there is a restaurant revitalization program that was launched in March of this year. And they've only outlaid, I should say only, but talking about $28.6 billion worth of funding for these particular companies. And I believe that some of this has already been pushed out Um, but a lot of this is going to be a problem because they still can't get people to come into the restaurant, or I mean, sorry, they can't get people employed to work. So I don't know if you guys have seen signs at some of your restaurants around, especially fast casual. A lot of places are struggling to get people employed there, so they're shutting down some of their dining rooms and waiting for people to come back before they employ a bunch of new people. One interesting caveat to this program is that women, veterans, as well as those in the economically disadvantaged social classes will get priority for this. So that's an interesting caveat that they put into this particular program. But if we can take a look at some of these stocks, obviously fast casual, McDonald's or fast food have done extremely well. You saw this, this quick rundown during COVID where everybody thought, the world was going to end. And let's see, no, we got to go back further for that. Yep, there's the world ending right here on McDonald's, all the way down to the 120 level, but have since popped back up here. And then we also have this restaurant revitalization, and people getting back to work, and economies seemingly doing better, and we're seeing this uptrend. However, if we look at something like Brinker, who does places like Chili's and Maggiano's, you're still seeing this uptrend here, as they still allow to do some takeaway and some pickup orders, but not quite as strong as what we saw from McDonald's. Well, maybe not. That's a pretty good trend there from 2020 forward. I'm trying to think what would be a good one that has pretty much dine-in only. Maybe Cracker Barrel. Similar chart. All these restaurants, it just seems, well, they still haven't quite gone past their pre-COVID level here. They jumped up right about to it here at this 165 level, now tracking back. So see a lot of these at truck stops, people dining in there rather than doing takeaway. One that's could be troublesome is Dave & Buster's. You have all these, whether it be kids or adults or whatever, going in, touching everything, playing with everything. They're going to have to, do some convincing to get people back. But certainly the government has stimulated enough to allow these companies to get back to normal levels. It's just a matter of, whether or not people begin to start going back out after being vaccinated, or just saying, I'm done with it. There's a lot of pent-up demand out there. Really is. And I think, as we come into this fall school year, people will want to be going out to spend money. They've been sitting inside, kind of dealing with a lot of things and problems and whatnot. And I think now is the time that people are really going to start, ramping up and saying, I'm done with this. But I'm trying to think of some other ones here. I mean, Darden. Looking at similar here, Darden's kind of consolidating here on the daily, so look for a break up or break down here, but still this long-term trend upward ever since the COVID lows. Cheesecake Factory also similar. It's amazing how well some of these dine-in restaurants were able to convert their facilities into a more of a takeaway type approach, but great uptrends here on some of these. SEC is talking about the gamification of trading. They're looking to reduce some of these, are looking to create some of these rules that'll regulate how brokers can display data, display trades. They're looking at places like Robinhood, even Schwab, TD Ameritrade, Thinkorswim. I would think even TradeStation. Because they're talking about these visually enticing colors are very leading people to trade more. Now I'm not sure if that's a bad thing or a good thing. I think it's mostly just people were stuck at home and had nothing better to do. They couldn't gamble, they couldn't go out to restaurants, they couldn't do anything. So what do? They turned to trading stocks or message boards like Reddit and and cryptocurrencies and Dogecoin. So I'm not sure if brokers really have a duty to, protect their customers other than, education. But people need to take some responsibility for actions, and it seems like retail traders actually have done pretty well throughout this pandemic. Other than potentially if people were sitting on the sidelines after selling out due to fear, but a lot of retail traders out there are making a lot of money on Gamestop, for instance, AMC. Gamestop is an interesting one here because it kind of looks like this heartbeat, and they have this daily chart where go up. Let's see here. Go up, come down, go up, come down. And now we're in this consolidation mode where it's starting to flatline here. And it's just a matter of whether or not traders will hold it up well enough or not, or whether GameStop can kind of convert their business into being something more than just an in-store or in-mall retailer to trade in games and buy games as more and more games become software that is online-based rather than a physical disc. AMC, also another one that retail traders attacked lately. Some good support here on AMC, but again, these are going to be some difficult ones to watch if there's a mass exodus from retail traders. So keep an eye on these. If you are a day trader, I'm sure there's a lot of action in there for those. The other SEC rule that they're talking about is this payment for order flow, which is one of the big problems that Robinhood had, as most of their order flow went through Citadel, and Citadel didn't want to provide any shares of GameStop to purchase. So this payment for order flow is whether or not these brokerages have this duty to give their traders and investors the best price. Now, payment for order flow, if you guys aren't familiar with it, but it's basically wholesalers like Citadel, they pay brokerage houses to receive their order flow, and they do this in order to kind of scalp the bid-ask spread. It's, the old days of the market maker. He sits there, he takes orders in, bid ask. He controls that order flow and makes that money on that spread between the bid and the ask. Now, back in the days of, the 90s, 80s, 70s, whatever it might be, the bid-ask spread was a lot wider. We're moving into a stage now where the bid-ask spread is, pennies. But, again, it's that take a penny, leave a penny. If you do it enough times, there's a lot of money to be made, especially when there's a lot of volume coming into the market. So a lot of these wholesalers, really push to get the order flow from the Schwabs, the Robinhoods, the TD Ameritrades, as a lot of times retail traders are hitting the market or just not caring about, price or not setting limits. So this is how we get free trading. I mean, that's what it boils down to. So you got to pay attention to that, and this is a topic the SEC wants to look into. And lastly is the looking into the use of swaps or derivatives to gain stock exposure. As we saw, I think it's Archegos, I think Andrew calls it Archegos, the huge collapse there as he hid behind his positioning using swaps or derivatives and not having to report them, as he actually didn't hold the stocks. He had contracts in order to buy them. So some of the companies that really got messed up on this, Viacom obviously, but this is one that's really interesting to look at here from a longer term play, as Viacom is generally a pretty decent company. We are moving away from traditional media, but Viacom's a big corporation, so look for some support here. You can see on the weekly chart, you have some really, really good support here down at 37 or so, which takes it down to about 34. So, this may be an interesting one to take a look at from a longer term perspective. Baidu, another one that got crushed. This looks like a nasty little head and shoulders pattern here. Really big one. And then dropped off. So maybe getting some support here. It looks like they have some support here down at 178 or so. Tencent Media, also a big problem. So SEC is going to look into some of this stuff and potentially change some of the rules. So be on the lookout for that as well. I'm not sure if I'm going to have time to get through India and a couple other things, but I want to look at some of these stocks that you guys have put in there because there's quite a few. So let's take a look at these. Coinbase, not a lot of stuff going on here. This is an IPO, hard to really take a look at, but this is going to move with the level of cryptocurrencies. Cryptocurrencies have actually been on the rise, but Coinbase has been continuing lower here. So kind of a difficult one to judge here from a technical aspect, but certainly going to be a mover throughout the time because of volatility with cryptocurrency. So tough one to analyze technically. Palantir. You saw this long consolidation pattern here on Palantir. This was a pretty easy one to take a short at after this breakdown here at the 21 or 21.5 level. Now you got this downtrend that you're going to be combating, and then you're going to have this upside resistance going forward because I think there's going to be quite a bit of volume at price there. So yeah, I think that one's not looking real good. Kind of a falling off a cliff moment there for Palantir. Vales is an oil company, I believe, right? Let's take a look. Some of these oil companies have done extremely. Oh no, are they miners? Iron ore. Yeah, so a lot of these commodity-based companies, whether it be oil and gas, steel, I think Cleveland Cliffs also has done really, really well. You've gone from a price here back in April of $4 or so up to $20. So all these raw material providers are really benefiting from these huge price increases. I know we've looked at Louisiana Pacific, also done really, really well lately as the price of oil and various other commodities, are on the rise finally. I mean, I think we've gone through, it's been maybe 10 plus years where we've seen commodities on the downturn. I'm trying to think of the symbol for commodities. DBA is, that's the ags. I can't quite remember the DJP. Yeah, here's the Bloomberg Commodity ETN, but you can see that, I'm trying to see if I can do this on a weekly chart, how bad commodities have performed over time. Yeah, you see this here? I mean, we're talking about from 2012 all the way down here, and now finally we're getting a little bit of a blip higher. So, commodities are finally getting their day in the sun, but it's been a difficult road for them, that's for sure. Gold. These are gold miners. Obviously going to move in tandem with gold prices having a good breakout here on the daily chart for gold and a good shorter term uptrend here. So we had this breakout here, kind of false broke out on May 3rd and then continued yesterday where we saw that larger breakout. So watch for this to continue higher. Let's take a look. Let me see if there's any upcoming resistance points on gold. Very strong resistance point here on the GLD around this 173 level. So watch for it to kind of take a pause there potentially before moving higher. Had another person ask Nick. He says, "What are your thoughts on the IWM?" Which I guess is that's the Russell 2000. So he's seeing a Head and Shoulders. Taking a look at, so I think maybe he's talking about on the daily here, looking at this shoulder here, the head, and then the shoulder here. Looks like an interesting pattern stacking up here. I agree, Nick. Certainly we're below on the IWM. This 222, which is there's some high volume there, could potentially break down, and then we see some support down here at 211. So that's an interesting one to look at, Nick. Appreciate that. That's a good Head and Shoulders pattern for those if it does continue to move a little bit lower there, and it also is confirmed on the radar as well as the altimeter. So interesting. Lastly, we only have a couple minutes left, but one thing I do want to note is that yesterday Jamie Dimon came out, or no, I'm sorry, not Jamie Dimon. The CEO of Hilton came came out and said that business travel is back to 50% of pre-COVID levels, which, business travel is a big portion of their revenues. So Hilton, Hyatt, Marriott, Wyndham, as well as airplanes such as Love, JetBlue, and American, all going to, potentially be benefactors of this if business travel does come back. Jamie Dimon of JP Morgan Chase is sick of Zoom meetings. He's ready for everything to be back to normal. He thinks business travel will be back to normal by September of this year. So watch those particular companies. If you guys don't know the symbols, I'll just push them down here real quick. They're HLT, H, Marriott, MAR, and some of the other ones here as far as the hotels go. Be on the lookout for those as business travel comes back to normal. Maybe we'll save the estate tax for next week. I'll have Andrew go over that with you guys and his particular proposal. But have a great day, guys, and thanks for hanging out with me.